You are listening to Charting Wealth for Wednesday, the 9th of November, 2016. The presidential elections ended on Tuesday. What was our advice regarding the market? It was, don't be in it because we don't know which way it's going to go. As you're listening to this, most of you are listening to it before the market opens. Now, I can tell you where things are poised right now and what probably will happen when the market opens. If indeed Donald Trump wins, the market will probably go down. If Hillary Clinton wins, the market will probably go up. Now, it is still in a confirmed down move, although over the last 2 days, we just had our 2-day candle end on Tuesday, the 8th. It was actually an up candle, had a big wick about the same distance that about the same size as the green box. So that is definitely with our Heiken Ashi type candlesticks. That is a strong portent of an up move, but it's only one 2-day candle. It did rise, well, it rose actually more than the other one had fallen. It recovered over that on the prior 2-day candle that ended on the 4th of November. Didn't go all the way up to recover all of the losses from the 2nd, much less when the move started down on the 27th of October. It also has not crossed yet going up, so we're still in a confirmed down move on both the weekly and particularly the 2-day chart. We haven't had a crossover of the PPO. We have seen the derivative oscillator lose downward momentum back to the same downward momentum the market had on the 2nd of November in down move. So we haven't had a complete reversal. It's only 2 days. We did see the price rise above the weekly trend line at some point during the day, but again settled way back down from that. On the 5-minute chart, which we rarely, if ever, talk about, the market did rotate over at the end of the day. If we look at the 4-hour chart, we have four 4-hour candles, represents 2 days of up movement, actually crossed over in the afternoon of Monday the 7th, going up. And again, that price settled out below the weekly trend line and above the 2-day trend line. We again are in at least a pullback, but we don't have a crossover going up on our 2-day chart, so we're still in a confirmed down move on both the daily and, the 2-day and the weekly. Let's look at the S&P. Oh, for the record, the IYY, the total market, up 0.45% for the day. The S&P 500 up 0.43% for the day. Again, all the strong up move throughout the day muted at about half of where the market had eventually reached during the day. Don't have a crossover going up. Derivative oscillators lost some momentum. We shall see when the market opens on Wednesday morning just what the sentiment is after the returns come in. All right, let's look at the 4-hour chart, see what we see. Again, the S&P 500, 4-hour candles, 2 days of strong up movement, and actually did close on the 4-hour chart above the weekly trend line. So lots of strong up movement. And in fact, that up movement on the S&P 500 actually recovered all right up to where the losses almost were when the market started moving down. So that is interesting. The S&P a little different than the total market. But again, still confirmed down moves on the S&P, the total market, and same with the Qs. It is not crossed over either. Derivative oscillator lost just a little bit of energy. The Qs is now moving up toward on the PPO. It is now moving toward the signal line, but lots and lots of up movement over the 2-day period on the latest candle, and the Qs lost the majority of that. Looks like the up move on the wick was about twice as much as where the candle settled out, and the candle's still well within the down movement on just the 2-day candle that ended on the 4th of November. So the Qs didn't have anywhere near that upward push, settled well below the 2-day trend line and the weekly trend line. Again, remember the Qs, the NASDAQ 100, the technology stocks. Very interesting. It was, however, up the most of the 3 indexes, up 0.66% for the day on Tuesday, on Election Day. Now we're going to look intraday, and of course, similar, we had a crossover in the morning on the crossover on the PPO didn't occur until the morning of Tuesday the 8th. We have 4 open box up candles, again representing 2 days movement on the 4-hour chart. And of course, it originally started with a green close box candle in the afternoon on Friday. That's where the up movement initially started on the NASDAQ 100. On the 4-hour chart, it did close above the 2-day trend line. But again, we have what one could consider at the most now a pullback on the 4-hour chart, but not a crossover going up on the weekly or the 2-day. All right, so now let's take a look at what gold has been doing. Gold is actually down on the latest candle, down for the day on Tuesday, 0.42%. It was down just about the same amount that the total market was up. And gold has pretty much leveled out on the derivative oscillator. We see that the MACD or the PPO is also slanting sideways, so gold on the 2-day chart has a closed red box candle with a down wick pushing through, the down wick pushed through the 2-day trend line, but it closed above it. If we look at the 4-hour chart, let's see what we see, because that is our big chart on that. Crossed over in the afternoon, going down on Monday and continued to move down, actually closed on the 4-hour chart below the 2-day trend line. So gold has moved over, going down. It's interesting though, over the course of the day, gold hit its lowest point in the morning, touched that again in the afternoon. Who knows if that's going to be a base. It's going to again be very, very likely to be affected by the outcome in the presidential elections. That's why we didn't recommend that you stay in any moves at all. Anything you're doing at this point, if you are in the market, is gambling, and we don't recommend that. If you want to gamble, you can sure do it. But again, it's hard to practice that. And again, remember, we're not a stock calling service. We're an education firm. We want you to open up your own online virtual trading account at any of the online brokerages and practice with us until you get good at reading these charts and you consistently are making virtual money in your trades and investments. And once you do that, you can read a chart well, feel comfortable, you can go out on your own and make your own decisions with your own money. We are not a stock calling service. Folks, that's where we are at the end of the day on Tuesday. So get ready to go into the market when it opens on Wednesday morning after the presidential election. If you want to help us out at Charting Wealth, please share all that we do with friends, companions, other people interested in investing, learning how to read charts. And we also would appreciate you going to our website, signing up for our newsletter. We'll email you videos of the podcasts, the screencasts that we do every day. You also go to iTunes, subscribe to our channel. It helps us a lot with the metrics. You guys have made us as high as number 6 in the world for stock market podcast, and we so appreciate that. Please help us with those metrics. Subscribe to our channel and give us a 5-star rating there at iTunes. Say something nice about us. Also, go to our YouTube channel and subscribe there. That is the first place we start putting up all of the important information we have to share with you, whether it's training, whether it's chapters in our new book, whether it is this daily podcast and our weekly review and forecast. We just appreciate you being with us. Let us hear from you. God bless. Keep practicing every day. 10 minutes is all we ask at chartingwealth.com.